Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. Today, we're diving into Lixte Biotechnology Holdings, Incorporation's latest proxy statement, where we'll uncover some interesting details about their upcoming annual meeting, and of course, their executive pay. Before we jump in, if you're new here and love getting straight answers from these often complex documents, make sure to hit that subscribe button. And if you want to join a community of fellow decoders, our Discord channel is linked in the description below. This report is all about getting shareholders ready for their annual meeting, where they'll vote on directors, auditors, and a big change to their stock incentive plan. But beneath the surface, we'll find clues about how the company is run and how its leaders are compensated. So, what exactly is this document, a Schedule 14A, all about? Think of it as the official invitation and information packet for shareholders before a company. Big annual meeting. It tells you who is running the show, what decisions need to be made, and why you, as a shareholder, should care. Lixte Biotechnology Holdings, Incorporated, is presenting this to its shareholders for their annual meeting. The company is holding its 2025 annual meeting, and it is scheduled for the 8th of December 2025. Normally these meetings are in the fall, but this one is happening in early December. You've got to wonder why they're recalling it the 2025 meeting when it is happening in late 2023. It seems like there might be a bit of a timeline mix up here. They're re-asking shareholders to vote on electing 5 directors, ratifying their accounting firm, and crucially approving an amendment to their 2020 stock incentive plan. This one is a biggie. They want to significantly increase the number of shares available under their stock incentive plan, adding another 2.75 million shares to a total pool of 3.5 million. This means more stock options and awards can be given out to employees and executives. Now, how do you actually vote? The company is making it convenient, offering internet and phone voting options until the 5th of December. If you are a stockholder of record, meaning the shares are in your name, you can vote directly. If your shares are held by a broker, you need to follow their instructions to ensure your vote is counted. And if you want to attend the virtual meeting, you need to register in advance. You get 1 vote for every share of common stock you own as of the 14th of October 2025. That is your voting power. If you are a stockholder of record and don't vote, your shares simply will not be voted. For beneficial owners, if you do not instruct your broker, they might not be able to vote your shares on certain matters, especially those that are considered non-routine, like the election of directors. Let's talk about who is looking to join or stay on the board. There are 5 nominees for director. Jordan Pursglove is the chairman of the board, and CEO, Jason Sawyer, Dr. Michael Holloway, Lourdes Felix, and Guy Primus. We're re-seeing a lot of director since 2025 here, which is a bit unusual for a report dated October 2025 detailing an upcoming meeting. It seems like the dates might be a little jumbled, suggesting these directors are either newly appointed or this report is reflecting future appointments. Jordan Pursglove seems to have a strong background in business and management, with experience in mergers and acquisitions and scaling businesses. Jason Sawyer brings decades of experience in the alternative investment industry, having led significant investments and raised substantial capital. He has experience with public companies. Dr. Michael Holloway is an emergency medicine physician and medical affairs executive with leadership experience in healthcare. His business experience is also highlighted. Lourdes Felix is a seasoned executive with over 30 years of experience in finance, capital markets, and public accounting, particularly within the biotechnology sector. She also has experience on the boards of public companies. Guy Primus brings extensive business experience, including roles in innovation and immersive experiences. Now, let's look at how the non-employee directors are compensated. They have a base annual compensation of $20,000, with additional amounts for committee chairs and members, especially for the audit committee. They also have the option to receive their quarterly compensation in cash or stock options. This is a pretty standard way to keep directors aligned with the company's performance. This is where it gets interesting. The summary compensation table for directors shows a lot of dash marks for salary, bonus, and stock awards in 2024 and 2023 for some individuals, but significant option awards dollar amounts. This suggests that a lot of director compensation is coming in the form of stock options, which is common to align their interests with shareholders. The company is seeking to ratify Weinberg & Company, Pennsylvania as their independent registered public accounting firm for the fiscal year ending the 31st of December, 2025. They've been auditing the company's financials since 2013. So this is a move for continuity. Looking at the numbers, audit fees for 2024 were $104,205 and $120,640 in 2023. Tax fees saw a decrease from $32,860 in 2023 to $13,718 in 2024, while other fees saw an increase from $25,695 in 2024. The total fees for 2024 were $143,618, down from $153,500 in 2023. This indicates a slight cost saving in audit and related services compared to the previous year. This is the most significant proposal. They want to amend the 2020 stock incentive plan to increase the number of shares available. As of the 30th of September 2025, there were only 55,691 shares left available. The plan was originally for 233,333 shares, then increased to 433 and then to 733, and then to 750,000. Now they're re-asking for a massive jump to 3.5 million shares. Let's talk burn rate. A burn rate measures how fast a company uses up the shares it has available for employee stock plans. For 2024, Lixte Biotech's burn rate was 2.7%, down from 8.6% in 2023 and 7.8% in 2022. This lower burn rate in 2024 is good news, as it means they are using their available shares more efficiently, which can reduce dilution for existing shareholders. The 3-year average net burn rate is 6.1%, which is not excessively high but warrants attention as they plan to issue more shares. Now for the juicy part, executive compensation. The company states their philosophy is to attract, retain, and motivate officers to achieve business objectives, with a good portion of compensation being at risk and dependent on performance. Looking at the summary compensation table for executives, we see that for 2024, Bas van der Baan received a salary of $153,495, with no other compensation listed for that year. This is a significant drop from his 2023 figures, which included a salary of $40,639, but a large amount in option awards, totaling $403,066, leading to a total of $443,705. This shows a shift from heavy stock option grants to more straightforward salary. John S. Kovacs, the former CEO, had a salary of $190,860 in 2023 and $250,000 in 2022, with some option awards in 2022. James S. Mizzer, Robert N. Weingarten, and Eric J. Foreman also received salaries in 2024, with prior years showing significant option awards. This section is key for understanding how executive pay is tied to the company's actual performance. The compensation actually paid to the PAO, or Principal Executive Officer, decreased in 2024 compared to 2023. For 2024, the PAO received a salary of $153,495 in cash and no stock options. In 2023, the PAO received a salary of $231,499 and stock options valued at $403,066. This suggests a move towards less equity and more cash compensation for the top executive in the most recent completed year. The average compensation actually paid to non-PAO NEOs, or non-principal executive officers, also saw a decrease in 2024. In 2024, the 4 non-PAO NEOs received $542,516 in cash and stock options, worth $562,383 in total. In 2023, their cash compensation was $453,624 and stock options totaled $550,000. A slight increase in total average compensation here, but the cash component rose significantly for these executives. Now about the company's actual performance, the net income loss. Figures are stark in 2024. They had a net loss of over $3.5 million. In 2023, that loss was over $5 million, and in 2022, over $6.3 million. This tells a clear story. Lixte Biotechnology is not currently profitable. They are a pre-revenue drug discovery company, so this is sort of expected, but it highlights the high risk, high reward nature of their business. The compensation, particularly the stock options, is intended to incentivize executives to turn these losses into gains. Let's look at who owns what. As of the 30th of September 2025, there were about 5.7 million shares outstanding. Bas van der Baan, the CEO and Chief Scientific Officer, has about 4.9% ownership. Jordan Pursglove, Chairman and CEO, has about 4.4%. The other directors hold smaller percentages. What is interesting here is that the reported ownership figures seem to primarily consist of stock options, not direct stock ownership. This again emphasizes the reliance on equity incentives to drive ownership and align interests. Now for my take, Lixte Biotechnology Holdings Incorporated is clearly in a growth and development phase, hence the substantial losses and the reliance on stock options for compensation. They are asking for a significant increase in their stock incentive plan, which is crucial for attracting and retaining talent in the biotech sector. However, this also means potential dilution for current shareholders. The company's strategy revolves around innovation and research, which unfortunately has not yet translated into profitability. The compensation structure, heavily weighted towards stock options in the past, is a classic biotech approach to align executive incentives with future stock performance. The recent trend towards more cash salary for the payer might signal a shift, or simply reflect the current financial realities. The biggest takeaway is that Lixte is a company betting on future success through its research and development. Shareholders are being asked to fund this future by approving the stock incentive plan increase, which means they are betting on the company's leadership to deliver on its promises. The lack of current profitability is a significant risk, but it is inherent in this type of business. The company's direction is clear. Continued focus on drug discovery, with leadership incentivized heavily by equity. The opportunity lies in successful breakthroughs, while the risk is continued financial drain without a profitable outcome. Alright, that is our breakdown of Lixte Biotechnology Holdings Incorporated's latest proxy filing. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.